everyone, it's Dr. Brasfield with OptiZoom.com, where I can find and order everything I need for my optometric practice in one place. It's that easy. Now today I want to talk about the fundamentals of financing an optometric practice. The usual source of loans for the initiation of a practice is a full-service bank, although there are many other alternatives. The most basic aspects of bank financing involve the method of repayment and the type of interest. Borrowing money involves not only the act of obtaining the loan, but also the repayment of principal and interest. Although there are a number of methods used for the repayment of loans and for the computation of interest, today's discussion is limited to the usual techniques used by banks today. So banks rely on the following two principal methods for the repayment of loans. Renewable short-term notes are the instruments that acknowledge the loaning of money for relatively brief periods of time, usually 90 days, with the provision for renewal at the option of the lender. At the close of any 90-day period, the lender can demand payment of the balance due in full. Installment notes are instruments that provide for the periodic repayment of a sum at regular intervals, usually monthly payments over about 3 to 5 years. Either of two types of interest rates, simple or add-on, may be applied to short-term loans. Let's talk about those a little. Number one is simple interest. This rate applies a fixed percentage to the amount borrowed for a stated period. Simple interest is one of the most advantageous ways to borrow money. Should the borrower decide to pay off the loan early, there's no prepayment penalty because the interest is prorated for the actual number of days that the money has been borrowed. However, renewable 90-day notes are subject to fluctuating interest rates based on the prime lending rate during any 90-day period. Rates may be set at the start of the 90-day period or change each time the prime rate goes up or down. In the latter case, the rate may change many times during the course of the life of the note. Simple interest short-term bank loans are a preferred means of borrowing money to purchase equipment and start a practice. The second one is add-on interest. This method of determining interest is the more costly of the two rates. It is called add-on because the interest is computed on the amount borrowed without proration and added to the principal. This total is then repaid in installments during the course of the loan, which is usually 3 to 5 years. Add-on interest is commonly encountered in installment loans such as those of the financing of cars and boats. If a borrower decides to prepay an installment loan, the interest is short-rated rather than prorated. Short rating means that if the borrower pays off the loan early, the lender will charge a fee for administrative expenses and profit. A good clause to have with any loan is no prepayment penalty. A borrower should always inquire into the short rate charge with add-on interest before borrowing money if the borrower believes there is a possibility that the loan could be repaid early. Early repayment of an add-on loan is usually not advantageous if the interest is short-rated because the interest is heavily weighed towards the start of the loan. Usual banking custom is to use simple interest notes for relatively small amounts of money and short periods of time if based on the borrower's signature. Although an unsecured simple interest note can be obtained for various personal needs, the financing of equipment and the startup of a practice will necessitate the use of equipment and other collateral to provide security for the loan. Add-on interest is used for long-term financing involving periodic payments and is normally secured by an automobile, equipment, a house, or other collateral that is financed. Of course, the personal endorsement of the borrower is also obtained. So the burden is on the borrower to determine the type of financing being offered and whether the rate and terms of the loan are favorable and competitive for the market. So now you know the fundamentals of funding for your optometric practice. I hope you enjoyed today's practice management tip. Stay tuned for the next one to keep your optometry business at the top of its game. I'm Dr. Brasfield for OptiZoom. Until next time.